Hello everyone, and welcome back to another episode of Simply Wall Street's Market Insights. My name is Michael, and this week we're talking about IPOs in 2025. After a few quiet years, the IPO market is waking up. There are more listings, more capital raised, and a whole lot more buzz than we've seen in a long time. Not every IPO turns out to be a winner though. Some companies evolve into giants like Meta and Alphabet, while others fizzle out fast. In today's episode, we're diving into this new IPO boom. We'll break down what's happening, where the action is, how to separate substance from hype, and most importantly, what we investors should be keeping an eye on. You can read the full article by clicking the link in the description. Now let's get into it. It's been a while since IPOs dominated financial headlines. ARM and Reddit did attract attention recently, but the market hasn't seen anything like the IPO frenzy of 2017 through to 2021, when names like Uber, Airbnb, Spotify, and Snowflake all hit the public markets in a wave of investor excitement. That's changing now. In 2025, the IPO pipeline has reopened. The number of public listings and capital raised are already on track to surpass the last 3 years combined. Momentum is building. As standout IPOs succeed, others are stepping forward, encouraged by the market's appetite for fresh listings. Last week alone, Klarna announced it's heading to the public markets, and Trump Media shared plans to launch a crypto firm via a SPAC. Some recent IPOs have delivered major returns. Circle Internet Group went public at $31, opened at $83, and soared to $260 before settling around $130. That's still a 3x return for early investors. Figma opened at $115 after pricing at $33 and has since settled near $70. These big moves tend to spark renewed interest across the market, and that's exactly what's happening right now. The IPO resurgence isn't just limited to the US. Over half of the companies listing on US exchanges this year are foreign firms looking to capitalize on the credibility of a US debut. India is ramping up for a record-breaking year, with several high-profile IPOs expected by the end of December. Greater China, including Hong Kong, is also seeing a strong year, now accounting for about 1/3 of all IPOs globally. Southeast Asia is showing signs of life, though activity remains low compared to other regions. In Europe and the UK, IPOs are still moving slowly. Investors there are backing only the strongest opportunities. SPACs, surprisingly, are also making a comeback, especially in the crypto space. That's been fueled in part by the Genius Act and growing interest in Bitcoin treasury companies, which we covered last week. The IPO landscape in 2025 is expanding on multiple fronts, and it's not just regional, but structural. Now let's talk about the hits, the misses, and the lessons learned in the IPO space. IPO day is often exciting, especially when the stock pops. On average, IPOs rise about 19% from the offering price to the end of their first trading day. But that early excitement doesn't always translate into long-term performance. Finance professor Jay Ritter has studied over 9,000 US IPOs. His research shows that the average 3-year return is also just 19%, which is below the broader market. About 70% of IPOs underperform. However, there are patterns behind the success stories. IPOs tend to perform better when the company already has $100 million or more in revenue, is profitable before listing, even with lower revenue, and operates in scalable industries like tech. In contrast, smaller, unprofitable companies with flashier growth often struggle to hold their valuation once the hype wears off. So here are 4 things we investors should evaluate when we're considering an IPO. Firstly, we need to understand the motivation. If the IPO is mainly about insiders exiting or jumping on a hot trend, that usually shows up in the structure of the deal or the timing of the announcement. A founder who truly believes in the company often chooses to retain a meaningful stake, even after the IPO. Secondly, we need to look for scale and sustainability. High growth can seem attractive, but context matters. When revenue is small, big percentage increases are easy to manufacture with aggressive spending. It's more valuable to look at customer retention, gross margins, and whether the company has a viable path to profitability. Thirdly, we need to read the prospectus risks. The most honest assessment of any company tends to show up in the risks section of the IPO filings. This is where legal teams outline what could go wrong. Here at Simply Wall Street, we also track and highlight key risks for stocks in your watchlist or portfolio. And 4, keep monitoring after the IPO. The first few quarters after going public are often the most revealing. Quarterly reports show whether the company is hitting the targets it set pre-IPO. Keep an eye out for insider selling when lockups expire, and pay attention to how analysts adjust their expectations. Post-IPO, the narrative often shifts, and staying updated helps investors respond rather than react. So what's the insight here? An IPO is the final chapter in a long marketing campaign, and prices often reflect that. Investor sentiment typically peaks at the open, so valuations can be elevated. That doesn't mean investors have to buy immediately. If it's a solid business trading above your estimate of its fair value at first, waiting for a better entry point is a sound strategy. Irrational buying in the first days and weeks can give way to selling once reality sets in. We've seen that with a few IPOs recently. Those dips can offer better long-term entry points for investors who've done their homework. Our IPO screener, which you can find in the article, helps you to track new listings and filter for high-quality businesses. You can then use your watchlist or portfolio tool to monitor your fair value estimate of any stocks that you add there. You can save your filters, track these listings as they mature, and be ready to act when the odds tilt in your favor. And that's where we'll wrap up this week's Market Insights. The 2025 IPO wave is in full swing, and while it's creating opportunity, it's also bringing plenty of noise. The key is to stay focused, keep your standards high, and let the market come to you. Again, you can find the full article with our IPO screener linked in the description below. And of course, if you have any feedback, we would love to hear from you. We'll be back next week with more market insights. Until then, invest well.